Hey, how are you? My name is Mike, MikeStewart.ca, and welcome to episode 1 of How to Sell a Revenue Property here in Vancouver. Now, the first thing you need to do when you're thinking about selling a revenue property is you need to talk to your mortgage lender to check on how much your mortgage penalties might be. The next thing you need to do is talk to an accountant about how much tax can be payable. So I've got Sean Ackroyd of Ackroyd & Young here. Hey. Sean, how are you doing?
Good.
He's an accountant here in downtown Vancouver, and I wanted to ask him, the first question is, when you're selling a revenue property in Vancouver, is there tax payable and how much is it?
Absolutely. It depends on a couple factors. Your income tax bracket, how much other income sources you have, but generally 50% of a sale of an investment rental property will be included in your income.
Okay, cool. So say for example, I bought a property for $1, I sell it for $2, 50 cents of that gain will be included in my tax return as my taxable income.
Exactly.
Okay, cool. So, all right, cool. Now, next question for you. Does the timing of a sale, will that potentially impact how much tax I pay on the sale of a revenue property?
It's very important to consider. If you think about a year where you might have less income, if you retire or any other reason, it's a good idea to trigger that gain in that year.
So say for example, 2012 I'm making $2, 2013 I'm only going to make $1 because I'm retiring.
Right.
So it might be a good time to sell in 2013 because I might go down a tax bracket and pay less tax.
You'll be exposed to lower marginal tax brackets.
Ah, okay. Now how about this? Say for example I bought the property with a business partner. That business partner makes $1 a year, I make $2 a year. Is it possible to split the capital gain between the two partners to reduce the tax exposure?
Absolutely. That's very common in a husband-wife situation. The property gain will be split, and it's a less of an income inclusion for both of you, plus if one of the spouse have a lower income, that's all the better, lower marginal tax rates.
Gotcha. Now, last question, are real estate commissions tax deductible on the sale of a revenue property in Vancouver?
The real estate commissions will be included as a selling expense and yes, essentially become tax deductible.
Well, that's what I like to hear. Remember folks, your real estate commissions on the sale of a revenue property here in Vancouver could very well be tax deductible, but one thing you need to do is with all these tax questions, you need to speak to an accountant to confirm all this, because I'm not an accountant, but Sean is. So Sean, where can they find you and learn more about what you do?
We're located downtown Vancouver. Our website is www.ackroydleyoung.com. and we can be reached by phone 604-691-1744.
Sean, thank you very much for coming down. Real pleasure.
Yeah.
My name is Mike Stewart. Thank you very much for watching. If you have any questions, give me a call, 604-763-3136, or email me at mike@mikestewart.ca. Thank you very much for watching.